Good day Forex trader. Your USD Forex signal, rebound to 1.1440 likely amid Omicron. The pair will likely keep rising as bulls target the 50% retracement level at 1.1440. Bullish view. Buy the Euro USD and add a take profit at 1.1440, 50% retracement. Set a stop loss at 1.1200. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.1250 and a take profit at 1.1180. Add a stop loss at 1.1380. The Euro USD pair rose slightly on Monday even as the number of Omicron variant cases keep rising and countries add travel restrictions. The pair rose to 1.1310, which is about 1% above the lowest level this month. Omicron variant. The biggest concern globally is the rising number of Omicron variant that started to spread last week. The number of cases continued rising during the weekend as more countries announced travel restrictions. This happened as the World Health Organization, WHO, designated it as a variant of concern. It attributed this to the fact that it was able to reinfect patients and evade vaccines. Subsequently, governments in the United States, European Union, UK, and South Korea announced travel restrictions for South African travelers. Still, there are concerns about how these restrictions will affect the global economy. At the same time, there are calls for new lockdowns in several countries. Already, Austria has announced a national lockdown in a bid to manage the spread. Germany and the Netherlands are also considering new lockdowns. The Euro USD will today react to testimony by Federal Reserve Chair. In it, he will likely address the new Omicron and its impact on potential Fed tightening. The US will publish the latest pending home sales numbers. The other key movers for the pair will be the latest inflation numbers from European countries. Analysts expect the data to show that the German headline Consumer Price Index, CPI, jumped from 4.5% to 5%. This will be the biggest increase in more than a decade. In Spain, the headline CPI is also expected to rise by 4%. The pair will also react to the latest Eurozone services, industrial, business, and consumer confidence numbers from the Eurozone. Euro USD forecast. The Euro USD pair has been in a major bearish trend in the past few months. This drop saw it move from a high of 1.1695 when the month started to 1.1182. The pair has bounced back in the past 2 days as the new variant has brought concerns. It has managed to move above the 23.6% Fibonacci retracement level. At the same time, the 15-day and 25-day moving averages, MA, have made a bullish crossover. At the same time, the Relative Strength Index, RSI, has moved close to the overbought level. For now, the pair will likely keep rising as bulls target the 50% retracement level at 1.1440. GBP USD Forex signal, sterling rebound to 1.3500 likely. The pair will likely rebound as investors predict a relatively resilient UK economy even as the Omicron risks rise. Bullish view. Buy the GBP USD and set a take profit at 1.3500. Add a stop loss at 1.3300. Timeline, 1 to 2 days. Bearish view. Set a sell stop at 1.3300 and a take profit at 1.3200. Add a stop loss at 1.3400. The GBP USD pair was little changed on Monday morning even as the UK confirmed that the Omicron variant had landed in the country. The pair is trading at 1.1335, which is a few points above the lowest level this month. UK new Omicron cases. Omicron will be the focus among investors and policymakers this week. The new variant was announced on Friday, pushing more countries to announce restrictions from South African countries. The UK was among the first countries to announce that it will restrict travelers from South African countries. The UK confirmed 3 new cases of the variant and health officials believe that the number of cases will keep rising. Other European countries like the Netherlands also confirmed new cases. Still, the government reiterated that the country will not impose new lockdowns in its fight against the variant. In a statement, Sajid Javid, the health minister, said that the government will not impose these restrictions. However, Boris Johnson announced that the government will add some measures to prevent the virus. They include wearing masks in public transport and in shops. In addition to the virus situation, the GBP/USD pair will react to a number of events today. In the UK, the Bank of England, BO, will react to the latest mortgage data. The Bank of England, BO, will publish the latest mortgage application and approvals data. Analysts expect the data to show that mortgage approvals fell to 71.25k, which was lower than the previous 72.65k. In total, mortgage lending declined from £9.52 billion to more than £4.75 billion. The pair will also react to the latest US pending home sales numbers. Analysts expect the data to show that pending home sales rose by 1% in November. Jerome Powell will also hold a testimony in Congress. GBP/USD forecast. The GBP/USD pair has been in a bearish trend lately. The pair dropped below a key support level at 1.3415, which was the lowest level in October. It also passed the support at 1.3358, which was the lowest level on November 12. It has also moved below the 25-day moving average. Therefore, the pair will likely rebound as investors predict a relatively resilient UK economy even as the Omicron risks rise. This could see it rise to the key resistance level at 1.3500. AUD/USD Forex signal, Aussie at risk as Omicron arrives? The pair will likely keep falling as bears target the key support at 0.7050. Bearish view. Sell the AUD/USD and add a take profit at 0.7050. Add a stop loss at 0.7180. Timeline, 1 to 2 days. Bullish view. Set a buy stop at 0.7150 and a take profit at 0.7250. Add a stop loss at 0.7050. The AUD/USD pair sell-off accelerated on Monday as concerns about the new COVID-19 variant remained. The pair dropped to a multi-month low of 0.7115, which was the lowest level since August. This was 5.7% below its October high of 0.7550. Australia detects Omicron. The AUD/USD pair tumbled sharply as Australia became one of the few countries to detect the new Omicron variant. The country's health ministry confirmed 2 new cases of the variant and there are concerns that more people will be infected. Therefore, there are concerns about how this growth in infections will affect the country's economy. The only optimism is that the country's federal and state governments have committed to reopening even as the number of cases rise. Business groups have also warned about new local and international restrictions. The government will also implement a 3-day isolation period for all international arrivals. Therefore, the new number of cases has led to worries that the Reserve Bank of Australia will sound dovish when it meets next week. Analysts were expecting that the RBA will tweak its policy statement and hint that rates will rise in 2023 instead of the previous 2024. The next key data to move the AUD/USD will be Australia's private home approvals and housing credit that will come out on Tuesday. The pair will also react to testimony by Jerome Powell, the Federal Reserve Chair. This will be his first statement since he was reappointed by Joe Biden. Analysts will be waiting for any change in sentiment during this meeting. Also, they will be watching out for any change in tone about the new variant of the virus. The AUD/USD will also react to the latest pending home sales numbers from the United States. Pending home sales are expected to rise by 1% after falling by 2.3% in the previous month. AUD/USD forecast. The AUD/USD pair has been in a major sell-off in the past few weeks. And last week, the pair managed to move below the key support level at 0.7170, which was the lowest level in October. It has also managed to drop below the 25-day and 15-day moving averages. The Relative Strength Index, RSI, has also been in a bearish trend. Therefore, the pair will likely keep falling as bears target the key support at 0.7050. On the flip side, a move above 0.7200 will invalidate this view.